Omkar of Axis is now with us. Omkar, 9,769 crores of PAT, 48,000 crores in terms of 48,800 crores in terms of revenue. The revenue number is looking comfortable versus what the street was estimating, right?
Yes, actually, the revenue numbers are much in line with our expectation. We were expecting around 4.4% of the growth Q on Q. I do not have the Q on Q growth with me right now, but it looks to be like much in line. But the main concern of
We are,
me is margins. That I think we were expecting around 26% to 20,
yeah.
26% of the growth. I mean 26% of the margin, but it's been declined at 25%. So that one need to be getting the clarity.
Correct. So what would you want to hear on the margin? And just correct me if I'm wrong. What is their margin guidance? 26 to 28 or 25 to 28?
I think it's 25 to 28%. I'm not sure about it, but it's I think 25 to 28%.
There. All right, so they can still be within their range of the margin guidance. In terms of dollar revenue, of course, as I told you, we are still awaiting. But for 48,885 crores is the revenue number versus 46,864. So that broadly gives you, a 4% sort of a growth number. What does that essentially tell you?
Yeah, it's just again, I mean, in much in line with our expectations. That is because mainly because of the strong the demand scenario. There looks to be the outlook for the IT sector as a whole. If you can think, it looks to be very very strong because the companies even in the month of the furloughs and a lot of vacations. So the billing rate has been declined. Q3 considered to be a seasonally weak quarter, but the many of our companies, I mean, like Infosys and TCS, have reported strong set of numbers in Revit, which indicates the robust scenario which has been taking place. So outlook is for IT as a whole. If you can see, the outlook remains robust and strong with the revenue growth that the companies are reporting. However, the margins are being likely to be considered
Getting the
to be
CC
taken care
number.
of.
Omkar, I'm just getting the CC revenue number. It's at 4%. Estimate was 3%. Now, can you give us a perspective on the CC growth of 4%?
Yeah, it was a beat. We were also expecting around 3% of the CC revenue growth, and it's been 4. If it is 4, then it's definitely beat in terms of the CC revenue growth. Now, the one should also look at the how the deals have been come for the quarter. So that is also one thing. But I think DC has done a good job in terms of revenue and deliverables, even in the time of the furloughs and the vacations.
Right. Can you just talk to us about the buyback? I mean, 18,000 crores, $40 million for a $150 billion company. Does it really matter even if the price is 16% higher?
Yeah, I mean, for the buyback, it's been, adding the additional cash flows to the investors. That's why the buyback has been created. So they have the huge amount of surplus. So they are giving back to the investors from the buyback. So I think it's like more of a additional cash flows that has been generated and transferring back to the investors. So it's definitely a positive move from my perspective.
Revenue number is 6524. That's $6.5 billion and 24 million. What would be your view on that? I'll just give you the estimate number. It was just here with me. 6524 is the dollar revenue number.
Yeah. We were expecting around 6,523 million. So it was much in line. I mean, and below. I mean, above expectations. So we were. I mean, it's a strong execution in terms of with such kind of a size the TCS has done. So it is definitely a good result in terms of revenue, but in terms of margins, one should. I mean, definitely one should consider, because we were expecting around margin improvement because of the absence of the wage hike that were they have considered in the previous quarter. But it's still been declining with the volume. So one must see why it is being happening and outlook going ahead.
Just stay on with us. We've got more details. Let's go back to Anisha for the same. So, Anisha, when the dollar revenue details are coming in, dollar revenue growth of or a hit of 1% versus what the street was anticipating. Then the CC revenue number coming in at a percent higher. We're looking at that on a QOQ basis, which translates into 3.5-4% growth on a year-to-year basis in terms of a beat. Isn't it looking much better than what the initial thought was?
Well, yes, you are correct that I stand in terms of looking at the details. It does look like it's not. I mean, it is a good quarter coming in, even in terms of top line, because the dollar revenue growth is coming at 3% versus our expectation of 2.1%. So there is a sizable beat coming in. Obviously, not as big as Infosys, which had come in at 7% in terms of constant currency versus 3.5% of expectation. But definitely, as even the expert was mentioning that given the size and scale of TCS, even a 90 basis point beat in terms of top line is quite sizable. Even in terms of the rupee revenue, we were working with a growth of 3.3%. It's come at 4.3%. So yes, in terms of the top line, it's quite a decent number coming in from TCS, but it's the margin picture we'll have to look forward to. As far as the deal win is considered, it's largely in line with what the analysts were expecting. So last quarter, the deal wins were around $7.6 billion. This time around, the number has come at $7.6 billion as well, and the expectation was around 7.5. So in line with expectation as far as that is concerned. The management commentary continues to remain strong. The client additions continue to be strong because they've added 10 clients in the $100 million category. And even if you look at the verticals, they have clocked in decent growth when it comes to the verticals. It's mid-teen kind of growth coming in from largely most of the verticals. So overall, it's a decent set. But as I was pointing out, we'll have to wait by what the analysts think in terms of the overall change and upgrades, because Infosys has seemed to overshadow the numbers this time around.
Hmm. Omkar, but the thing is that you've got Infosys, which is trailing at a 32 times PE, whereas TCS stands at 31 times. We all know how great 2021 a year it has been for the entire IT pack. I mean, not just TCS and Infosys alone. While no one's debating here the long-term growth potential that these two companies have, given that they are the largest within the Indian IT pack. But just in the very near term, do you sense that Infosys would actually take pole position as opposed to TCS, and TCS may actually lag in fee?
From if in FY21 also, if you can see an annual numbers, the INFI have beat the annual growth that TCS has delivered, which is again likely to be the case of FY22. So we also believe that the gap is being narrowing up, and as the scaling up, the margins are likely to be improving, and the deals that both the companies, I mean, they have the strong scenario. So we'll definitely think that the Infi will likely have a better chance and value because in terms of the growth potential that they are doing it. Being at fairly valued at, I think TCS and Infosys is definitely a better bet because of the higher growth prospects. The gap is being narrowing up between the two in terms of revenue, and again the growth. The Infi have delivered a better growth.
Sure. Okay. I'm just going to read out some more numbers. Year to date, the TCV wins stand at $23.3 billion. The net employee additions, they are at about 28,238, the highest everly quarter addition that TCS has seen. They're saying that they actually are seeing signs of attrition bottoming out. So that's a pretty categorical statement in that sense. They've added 10 clients to the $100 million plus bucket, 21 clients added to $50 million bucket. The dollar revenue is at 3% growth versus expectations of 2.1%. So that's a definitive beat in that sense. The retail vertical growth was at 4.7% on a sequential basis, and India clocked 13% on a sequential basis. Omkar, given that you do believe, at least in the near term, TCS is fairly valued, and the fact that the buyback pricing is higher as opposed to what the street was anticipating at 4,500 rupees per share, and that's definitely way higher than the current market price. That's quite a sizable premium that we are talking about. To be 16.7% upsize to be precise. Uh, just wanted to understand, what do you now do with your price targets on TCS and whether they stay put?
I mean, I'll definitely being a bullish on the company's performance and the kind of company, the growth scenario is being doing. Because, across the world, the demand scenario has been looking strong. So for the next 1 to 2 years, the demand scenario likely to be remain robust. So I think they have the higher growth potential going ahead. For in case in terms of valuation and in terms of target price, I must see how the numbers are looking and depending upon the commentary of the management. But currently, the stock is being, trading at around, as you said, 31 P multiple. So I think, they have the growth potential going ahead. So we'll definitely, I'll recommend it definitely not for the sell or a hold, but I'll definitely buy. But depending upon the target price, what it comes. But I'll it might in case of target price, I'll definitely look at the buyback price or quietly higher than that.
Right. Anisha, just in terms of now the all the three numbers, can you just tell us that Wipro is looking weakish of the lot versus others, and TCS, Infosys is looking much better than others?
Well, yes, the pecking order only on basis of the Q3 performance has to be Infosys, TCS, followed by Wipro, because Wipro has definitely disappointed in terms of the top line performance, but as the ones that we are seeing from the likes of TCS and Infosys have been much better. Though Wipro has been able to kind of maintain the margins a tad bit better at 17.6%, but if the top line growth is not coming, the street will be worried about that. Their additions in terms of deal win was also pretty much in line with expectation at $600 million. For TCS, yes, we have been talking about how the top line growth is strong, but I wanted to check with Omkar in terms of margin, how worried one should be with respect to the margin picture, because it used to be around 27% in Q4 FY21 when the margins came in at 26.8%. It has been tapering off and it has come down to the level of 25%. How worried are you about that? And how much confidence you get from the management commentary when they say that attrition has bottomed out at 15%?
In terms of margins, is definitely being tapering down, but I don't think it's a thing to worry up. One must see what is the exact reason. As you know, definitely it has shown a decline from the previous years. But I believe, sorry, but I believe that as you know, it gets in volume growth. Definitely it gets stabilized one day or one way stabilizing within 1 to 2 quarters. That one should get. We'll also look for the management commentary on the margin front as well. In case of as far as the type of clients and the type of contracts that they are getting, the cloud in terms of cloudification and digitalization, they have the little bit less margins in terms as compared to ADM. So as you know, they are getting up, digital business and more of a cloudification kind of a business. So all, if you can see an impact, it's not only for the restricted for the TCS, but also it is across the industries, because the type of the nature of the contract that they are getting and the business they are getting is quite different. So one must understand that it's business is it into the transition phase. So one must see that how the margins are likely to be stabilized and the management commentary over it going ahead. So as far as my point of view is concerned, it will take a more 1 to 2 quarters, but it will get definitely stabilized. within 1 to 2 quarters.
Sure, that point is taking Omkar, but people hearing from the managements of Wipro as well as Infosys, Wipro talked about how their wins have been increasing and how they have been able to get more and more deals. 300 basis point improvement is what they talked about. Infosys talked about how they have been able to talk to the clients in terms of better pricing and realization. Do you see that pricing power return for TCS as well, or is that the reason why their margin is dipping a tad bit because the pricing is not that lucrative?
No, no, the pricing parity is definitely in their hands. It's going to be there. The deals have been in their pipeline, so it's going to be affected within 1 to 2 quarters. It's been into transition phase right now, so I think it's likely to be stabilized in 1 to 2 quarters.
Okay, fair enough. That point is also taken. But in terms of the overall sector now, what is your own pecking order? Which of the companies do you think will sizably be ahead in the curve as far as the revenue growth is concerned? And is there any specific business of TCS that you would be watching out for this quarter?
I believe Infi has definitely an edge over among the large caps, and I'll definitely bet on the same. Looks to be an lucrative bet in as you know they have the higher growth potential and delivering the consistent growth in past 1 to 2 years as beating down the TCS. And in terms of revenue growth momentum, I believe it has got a better chance. So my best pick is Infi. And secondly, for the TCS, I am betting not a specific as a contracts or any verticals, but BFSI and retail and CPG are the main verticals that I'm looking for. And how the management is going to be ramp up the deals that they have won, and depending upon the billings. So the commentary on the pricing, deal closures, and deal pipeline are to be, and of course a talent management it will be a task that is are the key monitorable things going ahead for the TCS.
Yeah, absolutely. They would be, wouldn't they? Omkar, good to speak with you, and thank you so much for taking the time out to analyze TCS's performance. Well, that's pretty much it. The scorecard as of now is looking at best in line. Margins sure at best are a bit of a miss as opposed to what the street was anticipating. The buyback quantum much higher at a 16.7% upside to the current market price on TCS. But that said, we're surely looking out for the management commentary, what they have to say in terms of a color on client technology budgets for the calendar year 2022, the size and pace of deal conversions for the quarter, as well as the deal pipeline, the outlook on the supply front, while they already have made evident in the press release itself that they actually see attrition bottoming out from the third quarter onwards. But yes, the capital allocation based on their buyback as well is something that the street is going to be looking out for. But Anisha, good to have you as well analyze TCS's performance. We're going to wind it up then on this special edition of Earnings with ET now.